Thank you for returning and settling in. We do run with about 100 people online consistently, in the sort of 90s to 100. That is part of the reason why we ask you to please engage with the speakers via the Slido. Scan, click, put your questions in. It comes to me, and at the end, I pretend that it comes from the audience when it's rude, and I put it to you guys, and we get away, and next year you're back for more of this abuse. So this is how the relationship works now. I'm very excited that this is an industry where we are affected by the madness of the world, the local politics. In the room at any point we have all the expertise of the market, looking forward, predicting. We have the whole range of producers, from the world's largest to people who are still in project phase. And this is why this is truly one of my favorite days. You can really put your arms around this industry and have all of it. And of course, we speak for 90% of the world's PGMs in this meeting here today. So what's not to like? We, in the afternoon, will look at 4 companies specifically. And then we're going to go to all the abbreviations, the alphabet soup. ICEs and BEVs and FCEVs and PGMs. And if that doesn't make you sick, hopefully at the end of it, you'll sort of understand what it all means. So that's the session 2T. It's going to be a fun session. Nothing as boring as this morning, I promise. So also live up to expectations. See if you can get some sense out of these 2 gentlemen. Good luck.
No,
Good
certainly
luck.
try. Thank you very much. Well, thanks for the introduction. We had an interesting session with 2 of the industry's renowned CEOs, and they call themselves mid-tier, probably like the Lions.
I call them that. They call themselves mega-tier.
Yeah, but probably the same as the Lions. Lions are mid-tier team. They're not quite at the top and they're not quite at the bottom. So we've got a few interesting questions I'm going to pose to my colleagues on my left-hand side, and I'm not expert on the platinum industry. I've only worked in the industry for about 40 years, so I'm not an expert. I probably have a crystal ball the size of a golf ball. So let's look at your crystal ball. So your project, let's start on my left.
Sure.
Because your projects over the next 10, 15 years, what does your crystal ball say for your company? What are your plans?
Yeah, so I think we've got some big plans ahead of us. As you may know, we're busy.
But how big are your balls? I mean, apparently that's relevant.
Maybe a bit bigger.
Bigger than mine, I'm golf ball
I
size.
just want to close the gap between this balls conversation and your company.
Yeah.
So the 2
we've got
match.
chrome-coated balls.
Chrome coat.
So
How did we get onto that?
yeah, I don't know.
You took us down the rabbit hole.
Okay.
So yes, we have some big plans. As you know, we're busy constructing our Karo project in Zimbabwe, which will see us doubling our PGM output from our current trajectory at the Tharisa mine in the Bushveld complex on the western limb. We're targeting about 200,000 ounces in the next 24 to 36 months, which dovetails with the commissioning and steady state production of the Karo project, which is approximately another 205,000 ounces. So we see our PGM output doubling within the next 3 to 5 years. And the beauty of the resource that we have on the Great Dyke is it's hugely scalable. So phase 1 only deals with about 10% of the endowment of the resources that we have there. It's a 96 million ounce resource. We've got reserves of just over 11 million ounces. And part of our strategy is to go from the open pit, early accessible ore body to decline development on reef, apparent dip, which adds a bit of complexity to the board and pillar mechanized mining, but has been done before, and we're busy completing those studies now. So we see a multi-generational opportunity in Zim on the Great Dyke at Karo, which potentially could double and double again. Okay. It has the opportunity to do that, and that's why we love that resource and that jurisdiction. We heard commentary earlier about the operability in Zimbabwe, and the skill set and the productivity is something that we welcome, and we can't wait to get into production. And we have delayed the project, we've slowed it down, so we are busy completing key strategic projects, bringing power to site, water to site. All the earthworks have been completed. About 70% of the civils are complete. We've procured around 70% of the mechanicals. So we're well on track to accelerating the project and meeting that sort of 2 to 3 year timeline.
Okay. So as you can see, there's passion about their baby. Probably talking about your rugby team is the same thing when you're talking about the future of your organization, which is great. Jaco, on your side, tell us about your baby and maybe the size of your balls.
How am I getting this conversation back to
You started it. I'm just following the cue.
No, look,
Rugby balls.
Rugby balls.
we're slightly in a different position from Phoevos and Tharisa in the sense that Sylvania Platinum is primarily a processor. We, our current operations and the way we currently derive value is from a suite of about 6 chrome and PGM dump beneficiation plants that also treat a combination of fresh current arisings and also run-of-mine material, primarily arising from the chrome industry. So slightly different from the primary PGM producers, but similar to Tharisa, where we target the chrome ores. And over the years, we've been expanding that business, to our current 6 operations, where we a lot smaller than the majors, obviously, but about 75 to 80,000 ounces at the moment. We're busy constructing an expansion project, Thaba joint venture on the north, that will take us to probably about 85,000 ounces. And then, with 1 or 2 similar initiatives, we're busy with about 200,000 ounces from the current business case, where we target chrome tailings, run-of-mine chrome sources. But then we have, as a second part of our business, some very nice optionality in terms of exploration assets on the northern limb. Mm-hmm. Now, did Nico leave? He's not quite as excited as us about it. But what is advantageous for us there is that we have some very shallow assets. Okay. Fault spread is most advanced at the moment. We have published a scoping study last year, with showing the potential of the project, and we're currently looking at, how do we just optimize on some of the metallurgical parameters and grades to optimize that. But so that's the one that's furthest advanced for us, and we would have to make a decision and say, do we now proceed with a feasibility, or where do we look to go with it? But what's nice, as I said, it's shallow. You could be in production in 4 to 5 years. Based on the where we are with authorizations and the infrastructure.
Okay, we're not going to go down the EV route, and certainly we had a good session this morning about what Trump has and has not done. So, the global demand in PGMs, how is it going to impact us in your view? Jaco, again, let's start with you and move our way back.
Okay. Look, I think, we also remain bullish on and about the PGM price. I do think we've heard from a lot more knowledgeable people in the marketing side of it and research earlier this morning, but we do share the view about the platinum, palladium, and rhodium being in deficit in the short and medium term. And I think for us, we take 2 views on that. So if you look in the next, say, 3 to 5 years, the shorter term, I think quite bullish still, palladium, rhodium. And where our current business, we have about a 12% prill split in rhodium, palladium about 25%, so we're nice over almost 65% platinum. So it's a good basket in our current business. So that is driving us to look at more opportunities in that kind of field. So you have similar dump projects, high return, cash generative, low cost, low risk businesses, and also the very nice benefit of co-production of chrome from it. Okay. That substitute your cost. Okay. If you look a bit longer term, and very briefly, it's just then, these northern limb assets, you have to start taking a view, what is palladium pricing going to do out in longer term? Platinum is still strong, so there's still good platinum in those projects. And then the importance is being low cost, low risk on those projects and high efficiencies. Otherwise, you're not going to keep your head above water.
Phoevos, we spoke about policy uncertainty this morning and global trends and what the politicians are saying. So what do you see as, let's talk about threats first and then opportunities in the market.
So certainly what we've seen coming into, let's say, a more optimistic outlook for PGMs structurally on the demand side, with the prolonged sort of life of internal combustion engines and the hybrid drivetrain taking up much more marketplace and market share. Leading up to, let's call the uncertainty of today, we really believe that the opportunities for growth are limited. And so the key here is to maintain yourself in that lowest cost quartile and using new technologies and opportunities which you have that when you're building a greenfield project to unlock value that perhaps wasn't or isn't available with a brownfields expansion or with a deep level labor intensive complex. So the opportunities lie in technology. I think the threats leading into the environment and the volatility are around access to capital. I think our constraint, our aspirations are bigger than our balance sheet. Let's put it that way. And so our constraint is accessing capital to build our vision. And so part of the reason why we've delayed the Karo project is accessing capital to complete that project. Okay, it's not the easiest jurisdiction. We've heard about fiscal uncertainty and policy complexities, which certainly does not make it easy. But we see, from our local bankers, there are few participants that will fund expansion and growth, and particularly greenfield projects. And so that needs to change, and it's really underpinned by the fundamentals, the structural supply and demand. So I think once there's conviction in the underlying story, I think capital will flow, and we'll start seeing, hopefully, projects being supported, not only from the capital markets, but also from a policy perspective and incentives, right? We are big employers. We contribute to the fiscus, and I think there needs to be recognition. Whereas at the moment, we feel like a little bit of a punching bag with all interested and affected parties going for mining companies. And so that narrative needs to change, and hopefully the Minister can support us in our initiatives.
Okay, we are at a PGM day, but chrome seems to play a major role in your decision-making and your revenue stream. So chrome used to be a byproduct to the PGM operations. Now PGM seems to be a byproduct to what you do. So Jaco, tell me about that.
Not quite for Jaco. Yet.
Look, not yet. So, but I think, so Bernard, you're right. So our current business, the 6 plants we have, don't derive any revenue from chrome. But we produce about 400,000 tons, between 350 and 400,000 tons a year of chrome for our host mines from the material we operate, the plants we operate. And although we don't generate a revenue from it, it opened the door and enabled us to create our business and get access to the PGMs there. So that was, key in the existence and in also the success story for Sylvania over the years. We have changed that business model now with the Thaba JV, where we will share 50-50 in the PGM and chrome. And, they in the 400,000 tons or 420,000 tons we would produce a year, we would share 50% of that chrome revenue. So you're right, Charl. So that suddenly means that we get about between 65 and 75% of our revenue is chrome at current PGM versus chrome prices. At longer term consensus, you're getting closer to a 50-50. So it is significant. But I think we also saw, and there was a nice paper, I think News 24 published about September last year, on the chrome benefit for the majors, and that also for UG2 played a major role. Anything between $500 million and $5 billion was the numbers I saw they quoted per year. It's significant. And I think when you look at projects going forward, certainly by leveraging chrome co-production, especially on a UG2 project or in the chrome material, there's significant benefit.
So Phoevos, how's the chrome market trends? How are they going to stimulate your project investments? You spoke about access to capital. So the trend's positive. What does your crystal ball say?
Yeah, so it's a fantastic industry. So it's driven by stainless steel, and stainless steel has grown on an average of 5% CAGR over the last 2 decades and double digits before that. And it's really driven by the Chinese economy and investment in technology, ferrochrome capacity, and utilizing the best in class processing technology. And so when you look at that growth rate on a 60 million ton a year market, that 5% equates to 2 million new tons of chrome concentrate that's required annually to meet that market demand or that growth. And there's only one territory in the world that can supply that, and that's South Africa. We account for 82% of Chinese imports and Indonesian imports, because China's got fabrication in Indonesia for stainless steel, and it's a growing industry. It's one of the few industries in South Africa that's growing. We grew 10% year on year in terms of production, 15% in terms of exports, and that talks to the ferrochrome debate and the discussion around that industry. But without investment and without support or an environment that supports that industry, it's very difficult to see how the ferrochrome industry or any energy-intensive industry can compete with that sheer might of the Chinese economy. So for us, chrome is critical. We'll produce between 1.7 and 1.8 million tons this year, accounting for just short of 10% of Chinese imports. So we're a significant player, top 4 producer, and we see opportunity. So we spoke about our PGM growth. We see our chrome growth in the next 3 to 5 years, hopefully getting to 2.5 million tons on an annual basis, and really driven by this very balanced, tight market. And we've seen prices react responsibly, I should say, to this tight balance of supply and demand. And so the outlook is positive. And what we need to put into context here is even with the tariff environment, a lot of the consumption of stainless steel is no longer your white goods, your washing machines and microwaves that are being exported. It's internally consumed within the Asia Pacifics, and it's driven by domestic consumption and growth. And the diversification of application of stainless steel has grown immensely. So as an example, a lot of people don't know that rebar is now been substituted, or carbon steel rebar, with ferritic stainless steel rebar. And those specifications are now mandated in China because of the corrosive resistant nature of the infrastructure projects that they're busy deploying. So these are huge demand drivers that potentially are not picked up in day-to-day commentary.
So we're talking about a gloom kind of view in the industry, but yet there's some upsides. You're investing in your project Tharisa, and you certainly are going forward into definitive feasibility. In actual fact, you're going to start construction soon.
Correct.
So tell us a little bit in about a minute about that project.
Sure. Try and keep it short.
Yep.
So we've got multiple pit operation at Tharisa, and on our west pit, we've decided to accelerate our underground development on a board and pillar mechanized mining methodology on the MG2 and MG4 reef horizons, and we've actually started with early infrastructure work. The DFS will be out in the next month or so for the final board approval and capital allocation to that project. We estimate peak funding over a 36-month period to be around 2 billion rand, and that west portal development will target to produce around 250,000 tons of ROM a month, so about 50% of our current production. We will still keep the open pit running, so we'll become a hybrid mine, mechanized board and pillar and open pit. And we like to say within 10 years, we would have already advanced the east portal and become a fully fledged underground mine.
Okay, excellent. Well, we spoke about courageous leadership, and Bernard said, let's push the envelope. So talk about your Thaba joint venture, because you're spending capital when everybody else seems to be trying to conserve cash flow.
Yeah, no, thanks, Charl. That was it is an interesting project for us, and we've, as I said earlier, so we're replicating our model that we already have. Thaba is almost the exact copy of Moenue, from the sense that we treat a combination of run-of-mine, fresh arisings, and historical dump material. It's about 2 million tons of dump we're treating, but with the difference that we will now generate revenue from chrome as well. So that business model changed slightly, but from a technical and production point of view, it's proven expertise, proven track record. So we were quite bullish and didn't hesitate to invest in this opportunity when it came along. I think it's also a confluence of the chrome market at the time and where PGMs were that gave us the opportunity. It's been very tough on the track record of our success over the past number of years to get access to new opportunities in the chrome industry. A lot of people have done it in-house. Glencore have built all their plants similar to us in-house, where we own all the Swanepoel plants. So it's becoming increasingly possible, but with a healthy cash generation from our current business, we were lucky enough to have at some stage 60 or 70% of our market cap in cash, so we could fund this project at a time when it was difficult to raise funding. It gave us access to it. So a very attractive project to diversify our risk in terms of revenue and also commodity, but generating good profits, giving us a nice life of mine. Adds more than current contract about 10 years potential to expand for us to do that, but nice sweetener on our business, and we are just on the brink of commissioning there, so we should probably look at the chrome circuit starting end of this month.
Excellent. So that's a positive set of numbers that you've just mentioned, both of you, that you're investing in a market environment that everybody else seems to be, well, let's see what the crystal ball brings. So where does technology sit in this? I'm going to ask you first. We've got about 20 seconds to
carry on. Carry on.
So tell me about beneficiation, downstream and technology. Where does it feature in your projects?
Yeah, so I think as an ethos and a culture, we look to innovation and to differentiate ourselves. Again, we've got lower grade ore bodies, so our philosophy is to maximize the recovery of every cube of rock that we mine. And so we've deployed technology in terms of ultra-fine chrome recovery, some patented processes which are successfully deployed, which give us enhanced yields and recoveries. From there, we've got 2 downstream strategies, and because it's a PGM day, let's talk about our PGM refining aspirations. So we've been running a 1 megawatt DC furnace producing an alloy, not a matte product, which we have refined successfully on a sort of pilot scale basis to 4/9 purity metal, and we're busy commissioning our first commercial reactor right now. And this is situated at NCP or Fluor. It's a chlorine gas to solid technology. It's a patent we bought called Chloroplat, and we're looking to commercialize that. So hopefully by the end of this year, we'll be able to demonstrate end-to-end refining, smelting and refining of our PGMs, and then the next level is to scale up. To take 100% of Tharisa's production and be self-sufficient and independent, we need about 7 megawatts of power, so it's not hugely power intensive, but it does give us a very beneficial opportunity, one, to be a producer of final metals, but also at a low-cost, modular, scalable basis. Because the rule of thumb always was if you didn't have 500,000 ounces or closer to 1 million ounces, there was no economic benefit to build downstream beneficiation. And we see that as one of the barriers for junior mining in terms of new projects and growth and potential constraints in downstream beneficiation.
Anything beyond smelting, perhaps in your pipeline?
Yeah, so we've got our chrome strategy. So we've got a chrome iron redox flow battery, which we're busy commercializing now. We've got 2 units in Germany, 1 at South Africa, 200 kilowatt. And by next year, we'll be rolling out megawatt scale storage. This is an IP we bought from the US, and subsequently have developed our own IP to produce the electrolyte. And this is large-scale grid storage. So we're talking 100 megawatt deployment. And because we have the raw material, we have the lowest cost of manufacturing the electrolyte, which has really been the constraint for the vanadium redox flow, let's say, competing technology. So it's not as efficient, but it's a quarter of the cost. And ultimately, everyone's looking at the cost of storage. And when we look at the growth curve of storage, it's exponential. And so there are many technologies, lithium ion being the most advanced, but their applications are not suited to every environment. So we see huge potential in terms of energy storage, utilizing this Redox 1 technology. And then on the chrome smelting side, we've done a lot of work at our beneficiation site where we look to, we have produced a chrome alloy, which is used in chrome grinding media. So the very balls that we use to grind, we're talking about balls again, grinding media, maybe I should be more politically correct. We produce that alloy that then goes into the grinding media. So it's a great circular economy. And then talking about energy intensity, we looked at a process to go to a final stainless steel product, so bypassing all the sort of intermediary phases which struggle because of the energy intensity. And so we've got the process to go from raw materials to final stainless steel product, whether it's ferritic or austenitic stainless steels. And that is a sort of a longer date strategic initiative, but it's something we've been working on with our Pyromet team.
Jaco, your final words on technology?
No, look, I mean, it is crucial, and I think we talk about it a lot. Phoevos mentioned, especially from a concentrate, most of the junior mid-tiers companies are reliant on off-take agreement. You have to look at your concentrate quality. So, and you can't waste any metal in your process. So there's a very strong focus on R&D, both on flotation optimization, mass pull reduction, to look at how do you concentrate, and then also in alternative treatment routes. And Phoevos mentioned the critical scale you need. So with that, crucial in that is also collaboration. I think in the mid-tier space and everybody outside the primary producers to see how do you create that scale? How do we work together to create a critical scale that for alternative concentrate treatment to get better terms and secure treatment capacity in future. So that is becoming a big focus. So certainly technology there is a big focus area.
Okay, let's go to Bernard now. He's got some fancy questions.
Yeah, no, thanks, Charl. And I think this makes the point of why an industry should have smaller entrepreneurial businesses who find solutions, which is very hard if you've been around for 50 years and you've repeated the past quite successfully. So I think in the top end, it's about optimization, and you guys sometimes out of necessity will do some breakthrough stuff, so it's very exciting. Can I understand the chrome space? So right now at Tharisa, you produce X. Some of it is PGMs, and where does it go? And your chrome, where does it go? Just talk us through that.
So we're targeting circa 150,000 ounces this year as our guidance to 160,000 ounces. We have 2 POC agreements, one with Northam and one with Sylvania, and then about 10% of our production goes through our pyromet and refining circuit that I mentioned. So that's the current arrangements we have on the PGMs. In Zimbabwe, we have some indicative terms for our concentrate. Ultimately, we'd like to deploy the same technology that we will be rolling out in South Africa in Zim to beneficiate in country, and there's some interesting partnerships that may transpire from that. In terms of our chrome, we are managing that whole pipeline. We have our own logistics team, we have our own marketing team in China and in Cyprus that sell to end users. So we engage directly with ferrochrome and stainless steel.
Concentrate it up to what, and then you truck it or rail it? Or?
So predominantly truck about 85%, 15% rail. 3 years ago it was the other way around. The ratio switched because of the Transnet challenges. So we produce 3 products or 3 grades. The majority, circa sort of 75%, is metallurgical grade, which is really destined for the stainless steel industry. We supply China and Indonesia predominantly, and we've started supplying India because they've got a mandate to grow their stainless steel industry, and they're trying to emulate the Chinese blending philosophy to bring in lower cost ores to bring their unit cost down. And one of the benefits of South African ore is that we have a high iron content, apologies, and so that is a credit or a benefit for any downstream process. The other 2 products we produce are chemical grade, and we're one of the largest chemical grade producers, and that's a globally diversified market from North America, Europe, Turkey, India, and Asia. And that's a premium product. Today, most probably trading at about a $50 premium to the met prices, which are trading around $285 as of yesterday.
Decent premium.
Decent premium. And then the foundry grade is a very specialized product, and we're a small producer relative to the rest of our book, and that's a more specialized product that goes into foundries globally for the linings of their castings.
And then your operations near Rustenburg, what's the nearest port, or what is the port that can handle what you export? So
traditionally we went through Richards Bay and Durban, containers through Durban and bulk terminal at Richards Bay. We utilize Maputo successfully now as well. And it's quite interesting that it's on a cost comparable basis to the SA logistics leg, and a very efficient port. So the turnaround time of trucks is pretty impressive in terms of that installation. So I would say around 40% of our production goes out of Mozambique.
And Jaco, your logistics different?
No, so our PGM concentrate offtake is primarily with Impala. We've historically had both Northam and Anglo box in the past, but currently it is with Impala. From a chrome point of view, the current chrome we produce, because it's going back to the host mine, it's primarily going to Swanepoel's ferrochrome business. We produce a 42 to 44% metallurgical grade concentrate. So we refine that gets pelletized and fed to the furnaces. The new concentrate for Thaba will be marketed by a JV partner, Kromtech, who owns Limburg Mine, where the project is situated. They've very successfully constructed and operated the tailings plants on the back end of Marikana and in UG2 in Rustenburg for Sylvania for a number of years. So they have existing marketing logistics systems for the chrome to handle that. And similar to what Phoevos said, there's been a move from Richards Bay to Maputo for the export. So yeah, a combination of the 2 ports there.
Yeah, and I'm unashamedly favoring the chrome conversation because I know nothing about chrome. Why would I sit here the whole day and know nothing about chrome at the end of it? Your Karo project, are you starting with chrome, or at some point you were going to do chrome, or was that changed?
So just
steps to
happiness. Sure. So the Karo project on the main sulfide zone doesn't have chrome.
No. Oh.
So it's base metal rich, copper and nickel, and even some cobalt.
Did
as
you
you've
not
seen.
known chrome mine?
So we do have chrome concessions on the
sorry.
boundary of the outcrop of the main sulfide zone. So we started that project a couple of years ago, very small scale, just to get our feet on the ground, to understand operating in Zimbabwe. Subsequent to that, the Zim government put an export ban on chrome concentrates, and market conditions weren't favorable, so we put that project onto care and maintenance, and we keep reassessing it. And one of the challenges is it's not scalable, so it will always be a small operation, very high-grade product, but narrow 30-centimeter type seams. So you need to manage your costs very carefully, and as I mentioned, very difficult to get to significant volumes that move the dial.
So it's clear from our two panelists here that they're very optimistic, and they've got investment
They've got
decisions.
those things that we're not allowed to refer to.
Clearly, their crystal balls are having a slightly
Chrome balls,
glass full kind of view, but it's supported by chrome. Absolutely.
No, I thought this would end up as a fantastically interesting chrome and innovation conversation. Gentlemen, thank you.
Thank you.
Thank you very much.
Thank you.
Thank you.
Sure. Thank you. Thanks.